Samantha, a 31-year-old veterinary technician, was scrolling through social media when she saw an advertisement that would test her understanding of legitimate mortgage lending and teach her valuable lessons about advance fee mortgage scams. The ad promised guaranteed home loans, bad credit okay, no money down required, and featured testimonials from happy homeowners who claimed to have received instant approval. Samantha had been renting a small apartment for years and dreamed of owning her own home where she could have a yard for her rescue dogs. Her credit score was fair but not excellent due to some missed payments during a period of unemployment, and she had been saving slowly for a down payment while working at the veterinary clinic. The website looked professional with official-looking logos and detailed mortgage information. Samantha filled out an online application that asked for her personal information, employment details, and financial situation. Within hours, she received a call from Premium Mortgage Solutions. Ms. Rodriguez, congratulations on your pre-approval for a $180,000 home loan, said the caller, who identified himself as Loan Officer Peterson. We specialize in helping people with challenged credit obtain the home financing they need, and your application shows that you qualify for our special program. Peterson explained that Premium Mortgage Solutions worked with private investors who provided alternative financing for borrowers who didn't qualify for traditional bank mortgages. He claimed that their program required no down payment and could close within 2 weeks. Ms. Rodriguez, our private investors understand that good people sometimes have credit challenges, and they're willing to provide financing based on your employment stability and commitment to homeownership. Peterson continued with apparent lending expertise and alternative financing knowledge. This program is only available for a limited time, and we need to secure your loan package before other applicants take your spot. Peterson requested a processing fee of $2,500 to cover underwriting costs, appraisal fees, and investor package preparation. He emphasized that this fee was fully refundable if the loan didn't close as promised, and that it would be credited toward closing costs. Samantha was excited about the possibility of homeownership, but was concerned about paying a large fee up front before receiving any loan documents or guarantees. However, Peterson assured her that processing fees were standard in alternative lending and necessary to secure her loan approval. Ms. Rodriguez, legitimate mortgage companies require processing fees to cover the costs of preparing loan packages for private investors, Peterson explained with apparent industry knowledge and lending procedures. This fee shows the investors that you're serious about the loan and covers all the administrative costs required to process your application through our private lending network. Peterson instructed Samantha to wire the $2,500 processing fee to Premium Mortgage Solutions and promised that she would receive loan documents and closing instructions within 3 business days of payment. Samantha felt hesitant about wiring money to a company she had only communicated with by phone, but Peterson assured her that wire transfers were standard in mortgage lending and that her money was protected by federal lending regulations. Samantha went to her bank and wired the $2,500 processing fee as instructed. Peterson confirmed receipt of the payment and promised that she would receive loan documents and property search instructions by the end of the week. However, after wiring the money, Samantha began to have doubts about the legitimacy of Premium Mortgage Solutions. She decided to research the company online and discovered that legitimate mortgage companies don't require large upfront fees before providing loan documents. Samantha also learned that federal lending laws prohibit mortgage companies from charging advance fees for loan processing and that legitimate mortgage companies are licensed and regulated by state and federal agencies. Samantha tried to contact Premium Mortgage Solutions to request her loan documents, but found that their phone number was disconnected and their website had been taken down. She realized that she had been scammed by criminals who used fake mortgage advertising to collect advance fees from hopeful homebuyers. Samantha contacted her bank to report the wire fraud, but learned that wire transfers are difficult to reverse once completed. She also reported the mortgage fraud to the Federal Trade Commission, her state's Attorney General office, and the Consumer Financial Protection Bureau. The authorities explained that advance fee mortgage scams target people with credit challenges who may be desperate for homeownership opportunities and willing to pay upfront fees for promised loan approvals that never materialize. Samantha learned that legitimate mortgage companies make money from loan origination fees and interest payments after loans close, not from advance fees collected before loan approval. Real mortgage lenders are licensed and regulated and provide detailed loan documents before collecting any fees. The experience taught Samantha to research mortgage companies thoroughly and to never pay advance fees for loan processing without receiving proper loan documentation and verification of the lender's licensing and regulatory compliance. Samantha now educates other potential homebuyers about advance fee mortgage scams and emphasizes the importance of working only with licensed, regulated mortgage companies that follow established lending procedures and consumer protection laws. Marcus, a 44-year-old high school teacher, received a phone call about mortgage relief that would test his knowledge of loan modification programs and teach him valuable lessons about mortgage rescue scams. The caller claimed to represent Federal Mortgage Assistance Program and insisted that Marcus qualified for government mortgage relief that could reduce his monthly payments by $800. Marcus had been struggling to make his mortgage payments since his divorce, and his monthly payment of $1,850 was straining his budget on his teacher's salary. He had contacted his mortgage servicer about modification options, but had been told that he didn't qualify for their current programs. The caller, who identified herself as Counselor Williams, claimed that Marcus's mortgage qualified for a new federal relief program that could reduce his interest rate to 2% and lower his monthly payments to $1,050, saving him nearly $10,000 per year. Mr. Thompson, our records show that your mortgage qualifies for the Federal Mortgage Relief Act that was recently passed by Congress, Williams said with apparent government program knowledge and mortgage assistance authority. This program is designed to help homeowners who are struggling with mortgage payments due to economic hardship, and your situation makes you eligible for significant payment reduction. Williams explained that the program required homeowners to stop making mortgage payments to their current servicer while the modification was being processed, and that all saved payments would be held in escrow until the new loan terms were finalized. Mr. Thompson, the federal relief program requires you to redirect your mortgage payments to our processing center while we negotiate with your lender for the payment reduction. Williams continued with apparent program procedures and government authority. This shows the lender that you're participating in the official relief program and prevents them from pursuing foreclosure while your modification is being processed. Williams requested Marcus to send his next 3 mortgage payments totaling $5,550 to Federal Mortgage Assistance Program to demonstrate his commitment to the relief program and to cover administrative processing fees for the mortgage modification. Marcus was hopeful about the possibility of lower mortgage payments, but was concerned about stopping payments to his current mortgage servicer, which could potentially trigger foreclosure proceedings if the relief program wasn't legitimate. I want to verify this relief program with my mortgage servicer before stopping my regular payments, Marcus explained to Williams. Can you provide me with official government documentation about this program and information about how it's administered? Williams became insistent when Marcus requested verification, claiming that the relief program had strict deadlines and that delaying enrollment could result in missing the opportunity for payment reduction. Mr. Thompson, this federal relief program has limited funding and strict enrollment deadlines. Williams insisted with apparent program urgency and government authority. If you don't enroll immediately, your spot will be given to another homeowner, and you'll miss this opportunity to save your home from foreclosure. Williams also claimed that mortgage servicers were required to participate in the federal relief program, but often failed to inform homeowners about available assistance, which was why the government had established the direct enrollment process. Marcus felt pressured by the urgency described by Williams, but decided to research federal mortgage relief programs and verify the legitimacy of Federal Mortgage Assistance Program before sending any payments. Marcus contacted the Department of Housing and Urban Development and learned that there was no federal program called the Federal Mortgage Relief Act, and that legitimate government mortgage assistance programs are administered through HUD-approved housing counseling agencies. Marcus also contacted his mortgage servicer directly and learned about legitimate loan modification programs that were available through established procedures that didn't require stopping mortgage payments or sending money to third-party companies. Marcus realized that Federal Mortgage Assistance Program was fraudulently claiming to represent government mortgage relief programs and attempting to collect mortgage payments from distressed homeowners without providing any legitimate assistance. Marcus contacted Federal Mortgage Assistance Program to inform them that he had verified the program as fraudulent, but the company continued to insist that their relief program was legitimate and urged him to enroll before the supposed deadline. Marcus reported the mortgage rescue scam to the Federal Trade Commission, the Consumer Financial Protection Bureau, and his state's Attorney General office. He learned that mortgage rescue scams often target homeowners facing foreclosure by promising unrealistic payment reductions and government assistance that doesn't exist. The authorities explained that legitimate mortgage assistance programs are administered through HUD-approved counseling agencies and established loan servicer modification programs that follow federal guidelines and don't require upfront fees or redirected mortgage payments. Marcus learned that homeowners should always verify mortgage assistance programs through official government agencies and should never stop making mortgage payments or send payments to third-party companies claiming to provide mortgage relief. The experience taught Marcus to research mortgage assistance programs through official government channels and to be suspicious of any company claiming to offer guaranteed mortgage relief for upfront fees or redirected payments. Marcus now educates other teachers and homeowners about mortgage rescue scams and emphasizes the importance of working only with HUD-approved housing counselors and legitimate loan servicers for mortgage assistance and modification programs. Elena, a 39-year-old office manager, was house hunting when she encountered a rental scam that would test her knowledge of legitimate property transactions and teach her valuable lessons about fake rental listings. She found what appeared to be the perfect house on a popular rental website, a beautiful 3-bedroom home in a desirable neighborhood listed for $1,200 per month, significantly below market rate. Elena had been searching for a larger rental home for her family and was frustrated by high rental prices in her area. When she saw the listing for the spacious house with a large yard at such an affordable price, she immediately contacted the number provided in the listing. The person who answered identified himself as Property Manager Johnson and explained that the house was available immediately because the previous tenants had broken their lease early. He claimed that the property owner was overseas on military deployment and needed to rent the house quickly. Ms. Garcia, this property is owned by a military family who was recently deployed overseas, and they need reliable tenants to occupy the house while they're serving our country, Johnson said with apparent property management knowledge and military family sympathy. They're offering below market rent because they want to help a good family and aren't focused on maximum profit while they're deployed. Johnson explained that Elena could view the property by driving by to see the exterior, and that interior viewing wasn't possible because the previous tenants had already moved out and the keys were being held by the overseas property management company. Ms. Garcia, due to the overseas deployment situation, the property viewing process is handled differently than typical rentals. Johnson continued with apparent military deployment procedures and property management constraints. The property owners have authorized me to handle the rental application and lease signing remotely, which allows them to secure good tenants while they're serving overseas. Johnson requested Elena to complete a rental application and provide the first month's rent plus security deposit totaling $2,400 before lease signing and key delivery. He promised that the keys would be mailed to her immediately after payment processing. Elena was excited about the affordable rental, but was concerned about paying money before seeing the interior of the property or meeting the property owners in person. However, Johnson assured her that remote rental transactions were common for military families and that her payment was protected by military housing regulations. Ms. Garcia, military deployment rentals are handled through established procedures that protect both tenants and property owners, Johnson explained with apparent military housing knowledge and deployment procedures. Your payment is held in a military housing escrow account until the lease is finalized and keys are delivered, so your money is completely protected. Johnson instructed Elena to send the $2,400 through a money transfer service and promised that she would receive the lease documents and keys within 2 business days of payment confirmation. Elena felt hesitant about sending money through a money transfer service to someone she had never met, but Johnson emphasized that military housing transactions required secure payment methods to protect the deployed service members' financial interests. Elena decided to drive by the property to view the exterior before making any payment. When she arrived at the address, she discovered that the house was actually for sale, not for rent, and had a for sale sign in the front yard with a local real estate agent's information. Elena contacted the real estate agent listed on the sign and learned that the house was indeed for sale by a local family who had never been in the military and had never authorized anyone to rent the property. Elena realized that criminals had stolen photos and information from the legitimate sale listing and created a fake rental listing to collect money from prospective tenants who believed they were renting the property. Elena contacted property manager Johnson to inform him that the property was actually for sale and not available for rent, but the phone number was disconnected and her calls went unanswered. Elena reported the rental scam to the Federal Trade Commission, her local police department, and the rental website where she had found the fraudulent listing. She learned that fake rental listing scams are common and often target properties that are legitimately for sale or vacant. The authorities explained that legitimate rental transactions involve meeting property owners or licensed property managers in person, viewing properties before payment, and signing lease agreements with proper identification and verification procedures. Elena learned that rental listings with prices significantly below market rate, remote payment requirements, and overseas property owners are common characteristics of rental scams that target hopeful tenants with unrealistic rental opportunities. The experience taught Elena to always view rental properties in person, meet property owners or managers face-to-face, and verify property ownership through public records before making any rental payments or commitments. Elena now educates other families about rental scams and emphasizes the importance of following established rental procedures and never sending money for properties that haven't been properly viewed and verified through legitimate property management channels. Thomas, a 52-year-old auto mechanic, received a letter about mortgage modification that would test his understanding of legitimate loan servicing and teach him valuable lessons about loan modification advance fee scams. The official-looking letter claimed to be from National Mortgage Review Board and stated that his mortgage qualified for immediate modification under new federal programs. Thomas had been current on his mortgage payments, but was concerned about his adjustable rate mortgage that was scheduled to reset to a higher interest rate in 6 months. He had been considering refinancing options, but was worried about qualifying due to a recent decrease in his overtime hours at the shop. The letter stated that Thomas's mortgage had been reviewed by the National Mortgage Review Board and found eligible for modification under the Homeowner Protection Act that could lock in his current interest rate and reduce his monthly payments by $400. Dear Mr. Wilson, our federal review of your mortgage account indicates that you qualify for immediate loan modification under new congressional legislation designed to protect homeowners from adjustable rate increases. The letter stated with apparent official government language and legislative authority. This modification can be processed immediately and will prevent your upcoming rate adjustment while reducing your monthly payment obligation. The letter explained that the modification process required a one-time processing fee of $3,200 to cover federal compliance review, documentation preparation, and lender negotiation services that were required under the new homeowner protection legislation. The Homeowner Protection Act requires specialized processing procedures that involve federal compliance review and certified documentation preparation. The letter continued with apparent legislative requirements and processing procedures. These services are provided by federally authorized modification specialists who ensure that your loan modification meets all congressional requirements and provides maximum payment reduction. The letter instructed Thomas to send the processing fee within 14 days to secure his modification before the deadline for enrollment in the Federal Protection Program, emphasizing that delayed enrollment could result in missing the opportunity for rate protection. Thomas was concerned about his upcoming rate adjustment and hopeful about the possibility of payment reduction, but he was also suspicious about the requirement to pay a large fee upfront for loan modification services. Thomas decided to research the Homeowner Protection Act mentioned in the letter and discovered that no such federal legislation existed. He also learned that legitimate loan modification programs don't require advance fees and are typically handled through existing mortgage servicers. Thomas contacted his mortgage servicer directly to inquire about available modification options and learned about legitimate programs that could help him avoid the upcoming rate adjustment without requiring any upfront fees or third-party processing services. Thomas also contacted the National Mortgage Review Board phone number provided in the letter and discovered that the number was answered by a generic voicemail system that didn't identify any specific organization or provide detailed contact information. Thomas realized that the National Mortgage Review Board was fraudulently claiming to represent federal mortgage modification programs and attempting to collect advance fees from homeowners who were concerned about upcoming rate adjustments or payment increases. Thomas contacted the Consumer Financial Protection Bureau to report the loan modification scam and learned that advance fee loan modification scams often target homeowners with adjustable rate mortgages who are worried about upcoming payment increases. The authorities explained that legitimate loan modification programs are administered through existing mortgage servicers and HUD-approved housing counseling agencies that don't charge advance fees for modification applications or processing services. Thomas learned that homeowners can always contact their mortgage servicers directly to discuss modification options and should never pay advance fees to third-party companies claiming to provide guaranteed loan modifications under federal programs. The experience taught Thomas to verify loan modification programs through his mortgage servicer and official government agencies rather than responding to unsolicited letters claiming to offer guaranteed modification services for upfront fees. Thomas now educates other homeowners about loan modification scams and emphasizes the importance of working directly with legitimate mortgage servicers and HUD-approved counselors for modification assistance rather than paying advance fees to companies claiming federal authority. Catherine, a 46-year-old social worker, was exploring refinancing options when she encountered a bait-and-switch mortgage scam that would test her knowledge of legitimate lending practices and teach her valuable lessons about predatory mortgage tactics. She responded to an advertisement promising 2.5% refinancing, no closing costs, cash back at closing. Catherine owned a home with a current mortgage at 5.8% interest and was interested in lowering her monthly payments through refinancing. The advertisement she saw promised interest rates significantly lower than other offers she had received from traditional lenders. She called the number in the advertisement and spoke with loan specialist Martinez, who confirmed that Catherine qualified for the 2.5% refinancing program and could save over $500 per month on her mortgage payments while receiving $8,000 cashback at closing. Ms. Anderson, you've called at the perfect time because our 2.5% refinancing program is only available for another week, Martinez said with apparent lending expertise and time-sensitive opportunity knowledge. This special rate is offered through our partnership with private investors who are looking to provide low-cost refinancing to qualified homeowners like yourself. Martinez explained that the program required Catherine to attend an in-person consultation at their office, where she would review loan documents and complete the application process with their underwriting team. Ms. Anderson, this special refinancing program requires personal consultation to ensure that you understand all the benefits and that we can customize the loan terms to maximize your savings. Martinez continued with apparent personalized service and loan customization expertise. Our office consultation allows us to review your financial situation and structure the loan for optimal payment reduction and cashback benefits. Catherine scheduled an appointment and visited the office of Premier Lending Solutions, which appeared professional with loan officer certificates on the walls and mortgage rate displays throughout the office. During the consultation, Martinez presented Catherine with loan documents that showed the promised 2.5% interest rate and $8,000 cashback. But when she read the fine print, she discovered that the low rate was only temporary and would adjust to much higher rates after 6 months. Ms. Anderson, the 2.5% rate is an introductory rate that allows you to experience immediate payment savings, Martinez explained when Catherine questioned the rate adjustment terms. After 6 months, the rate adjusts to market rates, but by then you'll have received significant cash savings and payment reduction benefits that will help you manage the adjustment. The loan documents also included numerous fees that weren't mentioned in the original advertisement, including prepayment penalties on her current mortgage, application fees, and processing charges that would significantly reduce the promised cashback amount. Martinez pressured Catherine to sign the loan documents immediately, claiming that the special rate program had limited availability and that delaying would result in missing the opportunity for the low introductory rate and cashback benefits. Catherine felt pressured by the urgency and the professional appearance of the office, but she was concerned about the rate adjustment terms and the fees that weren't mentioned in the original advertisement. Catherine requested time to review the loan documents with her financial advisor, but Martinez insisted that the loan terms were only guaranteed if she signed during the consultation appointment. Catherine decided to leave without signing and take the loan documents home for careful review. When she analyzed the terms with her financial advisor, she discovered that the loan would actually cost her significantly more money over time due to the rate adjustments and fees. Catherine also learned that the promised cashback was actually a second mortgage that would be secured by her home equity, creating additional debt rather than providing free cash as advertised. Catherine contacted Premier Lending Solutions to decline the loan and learned that the company had already ordered an appraisal and credit report using the application information she had provided during the consultation. Catherine reported the predatory lending practices to her state's banking regulator and the Consumer Financial Protection Bureau. She learned that bait-and-switch mortgage advertising is illegal and that legitimate lenders must provide accurate rate and fee information in their advertising. The authorities explained that legitimate refinancing involves transparent disclosure of all loan terms, including rate adjustment schedules and fees, before consumers are asked to sign loan applications or provide personal information. Catherine learned that consumers should always review loan documents carefully and never feel pressured to sign mortgage documents during initial consultations without adequate time for review and comparison with other lending options. The experience taught Catherine to be suspicious of refinancing advertisements that promise rates significantly below market rates, and to always verify loan terms through multiple lenders before committing to any refinancing program. Catherine now educates other homeowners about predatory lending tactics and emphasizes the importance of working with reputable, licensed lenders who provide transparent loan terms and allow adequate time for document review and comparison shopping. Michael, a 29-year-old graphic designer, was looking for his first home when he encountered an equity skimming scam that would test his understanding of legitimate property ownership and teach him valuable lessons about deed transfer fraud. He responded to a classified ad that offered rent-to-own opportunity. Bad credit okay. Move in immediately. Michael had been saving for a down payment, but was frustrated by competitive housing markets and strict lending requirements. When he saw the ad for a rent-to-own program that promised eventual ownership without traditional financing, he was interested in learning more. The person who answered his call identified himself as investment specialist Carter and explained that his company helped people with credit challenges achieve homeownership through creative financing arrangements that bypass traditional mortgage requirements. Mr. Roberts, our rent-to-own program allows you to move into your dream home immediately while building equity toward eventual ownership, Carter said with apparent real estate investment knowledge and alternative financing expertise. This program is perfect for people with credit challenges who are ready for homeownership but don't qualify for traditional mortgage financing. Carter explained that Michael would sign a lease agreement with an option to purchase the property after 2 years, during which time a portion of his monthly rent payments would be credited toward the eventual down payment for the property purchase. Mr. Roberts, during the 2-year lease period, $300 of your monthly rent payment will be credited to your down payment fund, so you'll accumulate $7,200 toward purchasing the property. Carter continued with apparent lease option procedures and equity building benefits. At the end of 2 years, you'll have built sufficient equity to qualify for traditional financing and complete the purchase with the down payment credits you've accumulated. Carter showed Michael a nice 3-bedroom house and explained that the monthly rent would be $1,800, which was slightly above market rate, but included the $300 monthly equity credit toward eventual ownership. Michael was excited about the opportunity for homeownership and the chance to build equity through rent payments, but he wanted to understand the legal aspects of the arrangement before making any commitments. Carter presented Michael with documents that included a lease agreement and what appeared to be a purchase option contract. But when Michael read the documents carefully, he discovered that he would be required to transfer the property deed to Carter's company immediately upon signing the lease. Mr. Roberts, the deed transfer is a standard procedure in rent-to-own arrangements that protects both parties and ensures that the property ownership transition occurs smoothly when you complete the purchase, Carter explained when Michael questioned the deed transfer requirement. This arrangement gives you immediate equitable ownership while protecting our company's investment in providing you with the homeownership opportunity. Carter insisted that the deed transfer was necessary to establish Michael's equity position and that he would retain all ownership rights during the lease period while building toward full ownership after 2 years. Michael felt confused about the deed transfer requirement and decided to consult with a real estate attorney before signing any documents that would affect property ownership. The attorney explained that legitimate rent-to-own arrangements don't require deed transfers, and that signing over the property deed would give Carter's company full legal ownership, while leaving Michael with no ownership rights despite his rent payments. Michael learned that the arrangement Carter was proposing was actually an equity skimming scam, where the scammer gains ownership of the property while the victim makes payments without building any actual equity or ownership rights. Michael contacted Carter to decline the arrangement and learned that Carter became aggressive and claimed that Michael was missing a rare opportunity for homeownership that wouldn't be available again. Michael reported the equity skimming scam to his state's Real Estate Commission and the Federal Trade Commission. He learned that deed transfer scams often target first-time homebuyers who are unfamiliar with legitimate property ownership procedures. The authorities explained that legitimate rent-to-own arrangements involve lease agreements with purchase options, but never require buyers to transfer property deeds before completing the actual purchase transaction. Michael learned that consumers should always consult with real estate attorneys before signing any documents involving property ownership transfers and should be suspicious of any arrangement that requires immediate deed transfers for rental properties. The experience taught Michael to thoroughly understand property ownership laws and to work only with licensed real estate professionals who follow established legal procedures for property transactions and homeownership programs. Michael now educates other first-time homebuyers about equity skimming scams and emphasizes the importance of legal consultation and working with licensed real estate professionals for legitimate homeownership opportunities. Rachel, a 35-year-old nurse practitioner, received a phone call about property tax relief that would test her knowledge of government assistance programs and teach her valuable lessons about fake tax relief scams. The caller claimed to represent the County Property Tax Reduction Office and insisted that her home qualified for immediate tax assessment reduction that could save her $2,800 annually. Rachel owned a home in a neighborhood where property values had increased significantly, resulting in higher property tax assessments that had increased her annual tax bill from $3,200 to $4,800 over the past 3 years. She had been concerned about the rising tax burden on her fixed nursing income. The caller, who identified himself as Assessor Williams, claimed that Rachel's property had been incorrectly assessed and that she qualified for the homeowner tax relief program that could reduce her assessment by 40% and lower her annual tax bill by $2,800. Ms. Taylor, our review of county assessment records indicates that your property was overassessed due to calculation errors in the county appraisal system, Williams said with apparent county government authority and assessment knowledge. The homeowner tax relief program allows us to correct these assessment errors and provide immediate tax reduction for qualifying homeowners. Williams explained that the tax relief program required homeowners to file corrected assessment applications through his office, which would review the property documentation and submit corrected assessments to the county tax office for immediate processing. Ms. Taylor, the County Property Tax Reduction Office was established to help homeowners navigate the complex assessment correction process and ensure that properties are assessed fairly according to actual market values. Williams continued with apparent government service mission and assessment correction expertise. Our specialized staff understands the technical requirements for assessment appeals and can guarantee that your property taxes will be reduced through our correction process. Williams requested a processing fee of $1,200 to cover the costs of property appraisal review, documentation preparation, and filing fees required for the assessment correction application through the county tax relief program. Rachel was hopeful about reducing her property tax burden, but was suspicious about paying a processing fee to a government office, since she believed that most government services were provided without upfront fees. I thought government tax services were provided without processing fees, Rachel explained to Williams. Can you provide me with information about how the County Property Tax Reduction Office is funded and why processing fees are required for assessment corrections? Williams claimed that the tax relief program was funded through processing fees rather than general tax revenue because it was a specialized service that benefited specific homeowners rather than the general public. Ms. Taylor, the Homeowner Tax Relief Program is a self-funded service that operates through processing fees because it provides specialized benefits to individual homeowners rather than general services funded by public taxes. Williams explained with apparent government funding knowledge and program administration authority. The processing fees ensure that only serious applicants participate in the program and cover the specialized costs of property assessment review and correction services. Williams offered to accept payment through credit card or electronic bank transfer and promised that Rachel would receive her corrected tax assessment and reduced tax bill within 30 days of payment processing. Rachel felt pressured by Williams' claims about limited enrollment periods and immediate tax savings, but she decided to verify the legitimacy of the County Property Tax Reduction Office before making any payment. Rachel contacted her county tax assessor's office directly and learned that no County Property Tax Reduction Office existed and that legitimate property tax assessment appeals are handled through established county procedures without processing fees. Rachel also learned that property tax assessment appeals can be filed directly with the county assessor's office without cost, and that homeowners have the right to appeal assessments through established procedures that don't require third-party assistance or processing fees. Rachel realized that Williams was fraudulently claiming to represent county government services and attempting to collect fees for tax relief services that were either non-existent or available directly from county offices without cost. Rachel contacted Williams to inform him that she had verified the non-existence of his office with the county government, but the phone number was disconnected and her calls went unanswered. Rachel reported the tax relief scam to her county sheriff's office, the state attorney general, and the Federal Trade Commission. She learned that fake government agency scams often target homeowners who are concerned about rising property taxes and may be unfamiliar with legitimate government assessment procedures. The authorities explained that legitimate property tax assessment appeals are handled through official county assessor offices and established legal procedures that don't involve third-party companies or upfront processing fees. Rachel learned that homeowners can always verify government services through official county websites and phone numbers and should be suspicious of any government agency that requires upfront fees for services that are typically provided without cost. The experience taught Rachel to verify government services through official channels and to be suspicious of any organization claiming government authority while requesting processing fees for services that should be provided through established public procedures. Rachel now educates other homeowners about fake tax relief scams and emphasizes the importance of contacting official county government offices directly for legitimate property tax assessment appeals and relief programs. Daniel, a 42-year-old construction supervisor, was facing foreclosure when he encountered a deed in lieu scam that would test his understanding of legitimate foreclosure alternatives and teach him valuable lessons about deed transfer fraud targeting distressed homeowners. He received a letter claiming to offer immediate foreclosure relief through property purchase programs. Daniel had fallen behind on his mortgage payments during a period of reduced construction work and had received a foreclosure notice from his mortgage company. He was desperate to avoid losing his home and had been researching options for foreclosure prevention and alternatives. The letter was from foreclosure relief specialists and claimed that Daniel qualified for their emergency property purchase program that could stop his foreclosure immediately and allow him to remain in his home as a renter while rebuilding his credit. Dear Mr. Phillips, our review of public foreclosure records indicates that your property qualifies for immediate purchase through our emergency property purchase program. The letter stated with apparent foreclosure intervention authority and property purchase expertise. This program can stop your foreclosure within 48 hours and provide you with immediate debt relief while allowing you to remain in your home. The letter explained that foreclosure relief specialists would purchase Daniel's property immediately for full market value, pay off his mortgage debt, and offer him a lease agreement that would allow him to continue living in the home while repairing his credit. The Emergency Property Purchase Program provides immediate foreclosure relief by purchasing your property at fair market value and assuming responsibility for all mortgage debt and foreclosure proceedings. The letter continued with apparent debt assumption procedures and immediate relief benefits. This arrangement eliminates your mortgage obligation immediately while providing you with housing stability during your financial recovery period. The letter instructed Daniel to contact foreclosure relief specialists immediately to begin the emergency purchase process, emphasizing that foreclosure prevention required immediate action before the legal proceedings advanced too far to be stopped. Daniel called the number provided and spoke with Specialist Morrison, who confirmed that Daniel's property qualified for immediate purchase and that the emergency program could stop his foreclosure within 24 hours of signing the purchase agreement. Morrison explained that the program required Daniel to sign a property deed transfer immediately to establish the purchase transaction, and that the company would handle all mortgage payments and foreclosure proceedings after taking ownership of the property. Mr. Phillips, the emergency property purchase program requires immediate deed transfer to stop the foreclosure proceedings and establish our ownership of the property, Morrison said with apparent legal procedure knowledge and emergency intervention authority. Once we own the property, we can immediately contact your mortgage company and assume responsibility for all payments and legal proceedings, which stops the foreclosure process completely. Morrison promised that Daniel would receive fair market value for his property and a favorable lease agreement that would allow him to remain in the home for as long as needed while rebuilding his financial situation. Daniel was hopeful about stopping the foreclosure and maintaining housing stability, but he was concerned about transferring property ownership without receiving immediate payment for the property value. Morrison assured Daniel that payment processing would occur immediately after deed transfer and that the emergency nature of foreclosure prevention required quick ownership transfer to stop the legal proceedings effectively. Daniel felt pressured by the urgency of his foreclosure situation, but decided to consult with a HUD-approved housing counselor before signing any documents that would transfer property ownership. The housing counselor explained that legitimate foreclosure alternatives include loan modifications, payment plans, and deed-in-lieu arrangements that are handled through mortgage servicers, not third-party companies that require immediate deed transfers. Daniel learned that the arrangement proposed by foreclosure relief specialists was actually a deed transfer scam where the company would gain ownership of his property without providing the promised payments or lease agreements. Daniel contacted foreclosure relief specialists to decline their program and learned that Morrison became aggressive and claimed that Daniel was making a mistake that would result in losing his home through foreclosure. Daniel reported the foreclosure relief scam to the Consumer Financial Protection Bureau, his state's Attorney General office, and the HUD foreclosure prevention hotline. He learned that deed transfer scams often target homeowners facing foreclosure who are desperate for immediate relief and may not understand legitimate foreclosure alternatives. The authorities explained that legitimate foreclosure alternatives are handled through existing mortgage servicers and HUD-approved housing counseling agencies that don't require immediate deed transfers or property ownership changes. Daniel learned that homeowners facing foreclosure should contact their mortgage servicers and HUD-approved counselors for legitimate assistance and should never transfer property ownership to companies promising foreclosure relief without proper legal representation. The experience taught Daniel to seek foreclosure assistance through established channels and to be suspicious of any company claiming to provide immediate foreclosure relief through property purchase programs that require immediate deed transfers. Daniel now educates other homeowners about foreclosure relief scams and emphasizes the importance of working with HUD-approved counselors and legitimate mortgage servicers for foreclosure prevention assistance rather than transferring property ownership to companies claiming emergency relief authority. Jessica, a 33-year-old marketing analyst, was researching home buying options when she encountered a phantom listing scam that would test her knowledge of legitimate real estate practices and teach her valuable lessons about fake property listings. She found what appeared to be an amazing deal on a real estate website, a gorgeous 4-bedroom house listed at $275,000, which was $60,000 below similar properties in the area. Jessica had been house hunting for months and was frustrated by competitive markets and high prices. When she saw the listing for the beautiful house at such an attractive price, she immediately contacted the listing agent to schedule a viewing. The person who answered identified himself as Agent Miller and explained that the property was priced below market because the sellers had relocated for work and needed a quick sale. He claimed that the house had just been listed and that Jessica was the first person to inquire about it. Ms. Carter, this property is priced aggressively because the sellers relocated to another state for work and need to sell quickly to avoid carrying 2 mortgage payments, Miller said with apparent real estate knowledge and seller motivation expertise. They're willing to accept below-market offers to ensure a fast closing and avoid the costs of maintaining an empty property while it sits on the market. Miller explained that the property had been professionally staged and was move-in ready, but that viewings were limited to serious buyers who could provide proof of financing and were prepared to make immediate offers. Ms. Carter, due to the below-market pricing, we're limiting property viewings to pre-qualified buyers who can demonstrate their ability to close quickly. Miller continued with apparent buyer qualification procedures and competitive market knowledge. This prevents the sellers from wasting time with casual lookers while ensuring that serious buyers have the opportunity to purchase this exceptional property. Miller requested that Jessica provide financial documentation including bank statements, employment verification, and credit score information before scheduling a property viewing, claiming that this was necessary to protect the seller's interests in the competitive market. Jessica was excited about the property and eager to view it, but she was concerned about providing detailed financial information to someone she had never met in person before seeing the property or verifying his real estate credentials. Miller assured Jessica that financial pre-qualification was standard practice for high-demand properties and that her information would be protected according to real estate privacy regulations and professional standards. Jessica decided to provide some basic financial information and was told that she qualified for a property viewing scheduled for the following afternoon. Miller provided an address and instructed her to meet him at the property at 2 p.m. When Jessica arrived at the address at the scheduled time, she discovered that the house was actually occupied by a family who had lived there for several years and had never listed their property for sale. The homeowners explained that they had been contacted by several other people who had been directed to their address by someone claiming to be selling their house, and that they had reported the situation to local police as potential real estate fraud. Jessica realized that Miller had created a fake property listing using photos and information from other real estate listings or property records, and that he was collecting financial information from prospective buyers without having any legitimate authority to sell the property. Jessica contacted Miller to inform him that the property was not actually for sale, but discovered that the phone number was disconnected and that her calls went unanswered. Jessica reported the phantom listing scam to the real estate website where she had found the listing, her state's real estate commission, and the Federal Trade Commission. She learned that fake property listings are common and often use stolen photos and information from legitimate listings. The authorities explained that legitimate real estate transactions involve licensed agents who can provide proper credentials and property access, and that buyers should always verify agent licenses and property ownership before providing financial information. Jessica learned that phantom listing scams often target competitive real estate markets where buyers may be willing to act quickly on attractive deals without proper verification of agent credentials and property ownership. The experience taught Jessica to verify real estate agent licenses through state regulatory agencies and to always confirm property ownership and listing authorization before providing personal financial information to unknown agents. Jessica now educates other home buyers about phantom listing scams and emphasizes the importance of working only with licensed, verified real estate agents and confirming property listing legitimacy through official real estate databases and property records. Gregory, a 48-year-old retail manager, received a letter about reverse mortgage benefits that would test his knowledge of legitimate senior financing and teach him valuable lessons about predatory reverse mortgage scams. The letter claimed that he qualified for a government reverse mortgage program that could provide him with $85,000 in tax-free cash without monthly payments. Gregory had been considering retirement planning options and was interested in ways to access his home equity to supplement his retirement income. The letter promised significant cash benefits and claimed to be authorized by the Federal Housing Administration. The letter stated that Gregory qualified for the government reverse mortgage program based on his age and home ownership, and that he could receive immediate cash without affecting his Social Security benefits or requiring monthly mortgage payments. Dear Mr. Hayes, our federal database review indicates that you qualify for immediate benefits under the government reverse mortgage program administered by the Federal Housing Administration. The letter stated with apparent government program authority and federal agency endorsement. This program provides eligible homeowners with tax-free cash payments while allowing you to remain in your home without monthly payment obligations. The letter explained that the reverse mortgage program was designed to help seniors access home equity for retirement security and that Gregory could receive $85,000 immediately while retaining full ownership and occupancy rights to his property. The government reverse mortgage program provides immediate cash benefits that can be used for any purpose, including debt consolidation, home improvements, medical expenses, or retirement income supplementation. The letter continued with apparent program flexibility and benefit options. These cash payments are tax-free and do not affect Social Security, Medicare, or other government benefit eligibility. The letter instructed Gregory to contact FHA reverse mortgage specialists immediately to begin the application process, emphasizing that program enrollment was limited and that immediate action was required to secure his benefits. Gregory called the number provided and spoke with Counselor Davis, who confirmed that Gregory qualified for the maximum benefit amount and could receive $85,000 within 2 weeks of completing the application process. Davis explained that the application required a processing fee of $4,500 to cover FHA compliance review, property appraisal, and federal documentation preparation that was required for government reverse mortgage programs. Mr. Hayes, the government reverse mortgage program requires specialized processing that involves FHA compliance verification and federal documentation preparation, Davis said with apparent government program knowledge and regulatory compliance expertise. The processing fee covers all costs associated with federal program enrollment and ensures that your application meets all government requirements for immediate benefit approval. Davis offered to begin the application process immediately if Gregory could provide the processing fee through wire transfer or certified check, emphasizing that program enrollment deadlines required immediate action to secure his benefits. Gregory was interested in the cash benefits, but was concerned about paying a large processing fee upfront for a government program that he believed should be available without advance fees. Gregory decided to research government reverse mortgage programs through official FHA resources and discovered that legitimate reverse mortgages are regulated products offered through approved lenders and don't require advance processing fees. Gregory also learned that legitimate reverse mortgage programs involve mandatory counseling sessions with HUD-approved counselors and established application procedures that don't involve upfront fees to third-party companies. Gregory contacted the FHA directly and confirmed that no government reverse mortgage program existed as described in the letter and that legitimate reverse mortgages are offered through FHA-approved lenders without advance processing fees. Gregory realized that FHA reverse mortgage specialists was fraudulently claiming government authority and attempting to collect advance fees for reverse mortgage services that were either non-existent or available through legitimate lenders without upfront costs. Gregory contacted FHA reverse mortgage specialists to inform them that he had verified their program as fraudulent, but discovered that the phone number was disconnected and that the company had no legitimate contact information. Gregory reported the reverse mortgage scam to the Federal Trade Commission, the Consumer Financial Protection Bureau, and the FHA fraud hotline. He learned that reverse mortgage scams often target seniors with promises of government benefits and guaranteed approval for large cash amounts. The authorities explained that legitimate reverse mortgages are complex financial products that require careful consideration and counseling through HUD-approved agencies, and that consumers should never pay advance fees for reverse mortgage applications or processing. Gregory learned that seniors interested in reverse mortgages should contact HUD-approved counselors and FHA-approved lenders directly rather than responding to unsolicited offers claiming government authorization or guaranteed benefits. The experience taught Gregory to verify all government benefit programs through official federal agencies and to be suspicious of any organization claiming government authority while requesting advance fees for program enrollment. Gregory now educates other seniors about reverse mortgage scams and emphasizes the importance of working only with HUD-approved counselors and FHA-approved lenders for legitimate reverse mortgage information and applications. Ashley, a 26-year-old teacher, was looking for affordable housing when she encountered a lease option scam that would test her knowledge of legitimate rent-to-own arrangements and teach her valuable lessons about predatory lease agreements. She responded to an online advertisement that promised, "Own your home in 3 years. No credit check. Low monthly payments." Ashley had been struggling to save for a down payment on a teacher's salary and was interested in alternative homeownership programs that could help her achieve her goal of owning a home without traditional mortgage financing. The advertisement directed her to a website for Pathway to Homeownership that featured testimonials from happy customers who claimed to have achieved homeownership through their innovative lease option program. Ashley called the number provided and spoke with Program Coordinator Johnson, who explained that their program allowed qualified participants to lease homes with the option to purchase after 3 years of on-time payments. Ms. Walker, our Pathway to Homeownership program is designed specifically for people like teachers who have stable employment but face challenges with traditional mortgage financing, Johnson said, with apparent alternative financing expertise and teacher-focused program knowledge. This program allows you to build equity through lease payments while improving your credit score and saving for the eventual property purchase. Johnson explained that Ashley would sign a 3-year lease agreement with monthly payments of $1,650, and that $400 of each payment would be credited toward the eventual down payment for purchasing the property at the end of the lease term. Ms. Walker, during the 3-year lease period, you'll accumulate $14,400 in down payment credits while building your credit history through on-time lease payments. Johnson continued with apparent equity-building procedures and credit improvement benefits. At the end of 3 years, you'll have established the credit history and down payment necessary to qualify for traditional mortgage financing and complete the property purchase. Johnson showed Ashley a nice 3-bedroom house and explained that she could move in immediately upon signing the lease agreement and paying the first month's rent plus a $2,500 option fee that would secure her right to purchase the property. Ashley was excited about the opportunity for homeownership, but wanted to understand the legal terms of the lease option agreement before making any financial commitments. Johnson presented Ashley with a complex lease agreement that included numerous fees and penalties, including charges for property maintenance, insurance, and early termination that weren't mentioned during their initial conversation. When Ashley read the agreement carefully, she discovered that the lease payments were significantly above market rent for similar properties and that the purchase option could be canceled by the landlord for various reasons, including late payments or property maintenance issues. Ms. Walker, the lease payments are higher than typical rentals because they include the equity credits and purchase option benefits that aren't available with regular rental agreements, Johnson explained when Ashley questioned the high payment amounts. This premium reflects the additional value you're receiving through the homeownership pathway program that regular rentals don't provide. Ashley also discovered that the lease agreement included a clause stating that any missed payments would result in forfeiture of all accumulated equity credits and termination of the purchase option, meaning she could lose her down payment credits for any payment issues. Ashley felt pressured by Johnson's emphasis on immediate signing and limited program availability, but she was concerned about the high payments and strict penalty terms in the lease agreement. Ashley decided to consult with a real estate attorney before signing the lease option agreement and learned that the contract terms were heavily weighted in favor of the landlord with minimal protections for the tenant buyer. The attorney explained that legitimate lease option arrangements should include reasonable payment amounts, clear purchase terms, and fair protection for both parties, unlike the predatory terms in the agreement Ashley was asked to sign. Ashley contacted Pathway to Homeownership to decline their program and learned that Johnson became aggressive and claimed that Ashley was missing a rare opportunity for homeownership that wouldn't be available again. Ashley reported the predatory lease option scam to her state's real estate commission, the Federal Trade Commission, and her local consumer protection agency. She learned that lease option scams often target people with limited homeownership options by promising unrealistic benefits through complex agreements. The authorities explained that legitimate rent-to-own arrangements involve fair lease terms, reasonable payment amounts, and clear purchase options that protect the interests of both landlords and tenant buyers. Ashley learned that consumers should always review lease option agreements with qualified legal counsel and should be suspicious of any program that requires immediate signing or claims limited availability for homeownership opportunities. The experience taught Ashley to carefully review all real estate agreements and to work only with licensed real estate professionals who provide transparent contract terms and allow adequate time for legal review and consideration. Ashley now educates other teachers about predatory lease option scams and emphasizes the importance of legal consultation and working with reputable real estate professionals for legitimate alternative homeownership programs. Benjamin, a 37-year-old accountant, received a call about mortgage insurance refunds that would test his knowledge of legitimate insurance policies and teach him valuable lessons about fake refund scams. The caller claimed to represent National Mortgage Insurance Refund Department and insisted that Benjamin was entitled to a $4,200 refund from private mortgage insurance overpayments. Benjamin had purchased his home 5 years earlier with a conventional mortgage that required private mortgage insurance until he reached 20% equity. He had recently requested PMI removal when his home value increased, and his mortgage servicer had confirmed the cancellation of his PMI payments. The caller, who identified herself as Refund Specialist Turner, claimed that Benjamin's mortgage insurance provider had been overcharging customers and that a class action settlement had resulted in automatic refunds for affected policyholders. Mr. Foster, our records indicate that you paid private mortgage insurance to Mortgage Insurance Associates between 2018 and 2023, and that you're entitled to a refund of $4,200 due to premium overcharges that were discovered during a federal audit, Turner said with apparent insurance industry knowledge and legal settlement authority. This refund is available immediately through the National Mortgage Insurance Refund Department that was established to process settlement payments. Turner explained that the refund was part of a larger settlement agreement and that Benjamin needed to claim his refund within 30 days or forfeit his right to the settlement payment. Mr. Foster, the mortgage insurance class action settlement requires all refund claims to be processed within the settlement deadline, and unclaimed refunds will be forfeited to the state unclaimed property fund. Turner continued with apparent legal settlement procedures and deadline requirements. The National Mortgage Insurance Refund Department was established specifically to ensure that eligible customers receive their settlement payments before the deadline expires. Turner requested Benjamin's banking information to process the direct deposit of his refund, along with a processing fee of $275 to cover administrative costs and federal compliance requirements for settlement payment distribution. Benjamin was hopeful about receiving a refund, but was suspicious about paying a processing fee to receive money that was supposedly owed to him from a settlement agreement. I don't understand why I would need to pay a fee to receive a refund that's supposedly owed to me, Benjamin explained to Turner. Can you provide me with documentation about this settlement and information about how the refund program is administered? Turner claimed that processing fees were required by federal regulations governing settlement payment distribution and that the fee was necessary to verify Benjamin's identity and banking information for secure payment processing. Mr. Foster, federal settlement regulations require identity verification and banking validation fees to prevent fraudulent claims and ensure that refunds are distributed to the correct recipients, Turner explained with apparent regulatory compliance knowledge and security procedures. The processing fee is a small cost compared to the $4,200 refund you'll receive, and it's required by federal law for all settlement payment processing. Turner offered to accept the processing fee through credit card or electronic bank transfer and promised that Benjamin would receive his refund within 3 business days of fee payment. Benjamin felt pressured by the deadline claims, but decided to research mortgage insurance settlements and verify the legitimacy of the National Mortgage Insurance Refund Department before paying any processing fees. Benjamin contacted his mortgage servicer and asked about any mortgage insurance refunds or settlements related to his policy. The servicer confirmed that no class action settlements had been announced and that legitimate insurance refunds would be processed directly through his mortgage servicer without third-party involvement. Benjamin also researched online for information about mortgage insurance class action settlements and found no legitimate news reports or official announcements about the settlement claimed by Turner. Benjamin realized that the National Mortgage Insurance Refund Department was fraudulently claiming authority to distribute settlement payments that didn't exist and attempting to collect processing fees from homeowners who believed they were entitled to legitimate refunds. Benjamin contacted Turner to inform her that he had verified the settlement as non-existent, but discovered that the phone number was disconnected and that the company had no legitimate contact information. Benjamin reported the fake refund scam to the Federal Trade Commission, his state's insurance commission, and the Consumer Financial Protection Bureau. He learned that fake refund scams often target people who have recently made changes to their insurance policies and may be expecting legitimate refunds or adjustments. The authorities explained that legitimate insurance refunds are processed directly through insurance companies or mortgage servicers and never require processing fees or third-party refund departments claiming government authority. Benjamin learned that consumers should always verify refund claims through their insurance companies or mortgage servicers and should be suspicious of any organization claiming authority to distribute settlement payments while requesting processing fees. The experience taught Benjamin to verify all insurance-related communications through his mortgage servicer and insurance providers rather than responding to unsolicited calls claiming refund entitlements from unknown organizations. Benjamin now educates other homeowners about fake insurance refund scams and emphasizes the importance of verifying all insurance communications through official company channels rather than trusting unsolicited calls claiming settlement payments or refund opportunities. These stories show us that scammers are getting more sophisticated, but knowledge is our best defense. Trust your instincts, verify everything independently, and remember, legitimate businesses never pressure you to act immediately.